Good evening, folks. Let's go ahead and get airborne with our full throttle double vertical session number 6. This is awesome. I've been waiting to do this one. As you can tell, I've been dying to get through vertical spreads just because we can get to this one. I did a lot of foreshadowing in the past couple ones on our bullish and bearish spreads because we can combine these together into something that's called a double vertical. I love doing this session because a lot of light bulbs go on like, wow, never even thought you could do that, but it's going to make sense here in a little bit. Apologies for this morning. Welcome to Lake Tahoe, Fish. Are you in Lake Tahoe? The obviously brand new building, Las Olas and Icon, internet issues. So I'm probably going to shoot a video tomorrow. I didn't see anything good trade wise to put on today, so sat on my hands, essentially watching what was going on in the markets. We'll talk about what buddy of mine, the CEO of the CME group. Very good guy. I interviewed him, Terry Duffy. I interviewed him several times, and a good dude on the Options News Network when I ran ONN TV. Very good guy. But we can cover that first. Before I get airborne now, yeah, let it snow, man. I'm staying until Tuesday, so hopefully there is some snow because I want to try and knock out some skiing there. Any other questions before we get airborne? Blowout earnings after the hours for what? Who was it? Google and then Amazon. Amazon just destroyed it. There's some other good earnings. So futures are actually looking up pretty good. Yeah, me too, Tamara. I love this tactic. And this tactic is only to be used in certain cases, but we'll talk about that. And what Marriott did. Fish TradeStation, they're reviewing our package, the Top Gun options package, the sponsorship deal, and that stuff is in work. So the TradeStation mission is underway. So we'll see. I just can't stand E-Trade anymore, and they just don't even care, which is a bad way to run a business. So we'll be I'll be covering that soon. We got to get this stuff out of the way first, folks. This guy needs to be fired. Bob Mueller needs to be fired or needs to be recused. So the FBI takes a trumped up, so to speak, dossier, a fake dossier that Clinton and the DNC paid for, to use it to get a bogus, flimsy FISA warrant to spy on Donald Trump. It's ridiculous. He should be fired. He should resign. He was the FBI director when all this Russia crap was going on. How is this guy still the special prosecutor? Trump should have fired him before, but everybody did. Oh my God, if he did that, it would be like, Archibald Cox and the Saturday Night Massacre with Richard Nixon. That narrative was 6 months ago. Now it's today when we know that dude, he and Comey are two peas in a pod. They have personally destroyed the FBI. The FBI is no longer some sort of independent agency and Boy Scouts and Girl Scouts. Now they are nothing more than political hacks. So they've destroyed the FBI. I heard a good interview. Who was it? I forget. They're like, get rid of the FBI, break it up, and reestablish it as something different because the FBI is done after this. Using a fake dossier to go get a FISA warrant to spy on a presidential candidate and the president-elect after he won. It's disgusting, folks. And you know why they did this, folks? I think I posted it on my Twitter feed. It said the reason that Obama and Clinton and this whole administration did all this crap is because what? They were convinced they were going to win and nobody was going to know. If Hillary Clinton was in office right now, this wouldn't even be an issue, would it? It's disgusting. They thought they would get away with it. So it is, yeah, exactly. I didn't laugh when Trump said, hey, I was wiretapped. All the liberals in the media, oh my God, this guy's mental issues and he needs to be impeached. I'm like, I guarantee you the guy, he ends up, when he makes these initial claims and the media goes apeshit, you can tell within 2-3 days that the guy's right. Everything he's been right on. So it's yeah, exactly, Brian. It's the uncleanables now. The FBI has been destroyed by Comey, by Mueller, and they're still waiting for this FBI agent to get out of his NDA so he can blow the whistle. I'm going to tell you for a fact, since I know some of these people, and this is public information, the reason the Podesta and Clinton emails got to WikiLeaks was because the previous administration sat on the Uranium One deal. There was a bunch of FBI agents who are decent people who said, "Are you kidding me? This Uranium One deal is dirty, it's disgusting, it's illegal." And when they squashed it, they turned all those emails over to WikiLeaks. WikiLeaks, has been America's best friends because it has uncovered the swamp here, ladies and gentlemen, um, and that's bad. Okay, Mario, what happened today, folks? Um, ECB to scale down, so we're going to taper, but extend the bond buying program. So ECB makes long-awaited move to pare back stimulus amid recovery. So we didn't see anything. I said there might be a little bit of a taper tantrum. There might be, whatever. No. So we'll talk about the breadth and depth of this market here. Yeah, Tamara, I saw that they're still waiting for him to testify, though. And finally, the FBI has been stonewalling for months to turn over information on Uranium One. They finally told the Speaker of the House. I don't get how one branch of the government gets to go, "We're just not going to comply with the congressional subpoena." I've had it. The lawlessness that is Washington. Why should we pay attention to laws? Why pay your taxes? Right? Animal farms. Yeah, plead the fifth. Everybody see today breaking news that the IRS finally admitted that they did spy on conservative groups and target them, and there's a federal judge that's going to rule that is actually illegal. So for Barack Hussein Obama to sit on national TV like he did for the past year and a half, say that didn't happen, that's bullshit, it's political, whatever, he's a liar. He's a liar. Yeah, big surprise. Big surprise that Barack Hussein Obama's administration used the most feared arm of our government, the IRS, to target political opponents. And now we know that they used a trumped-up dossier to get a FISA warrant to go spy on people. It doesn't get any dirtier, folks. This just ensured that Trump's going to win another re-election. All right, political rants complete. I didn't get to do that down in Fort Lauderdale. Like I said, Terry Duffy, he's the head of the CME group. Good guy. He was going to leave Chicago, a year or 2 years ago when they were going to raise taxes. He's like, "We're leaving. We'll go to Florida. We'll move the CME group to Florida." But surprise, surprise, the governor and everybody carved out some great tax exemptions, so the CME is still the CME. But very good interview on CNBC, guys. He said he keeps mentioning this. I think if we did a drinking game, he says North Korea about 9 times in here. And when vol comes, it's going to be fast and furious. He's like, nobody is, I'm surprised by the lack of volatility. I've been around this business for a long time. I've seen some geopolitical events make people's teeth rattle. And what you're seeing recently, which traditionally would have moved markets, is just not doing it. And then again, for all my good buddies that I know that are saying, "Hey, tax reform, if it doesn't happen, it's no biggie." That's not what Terry's saying. Corporate tax reform is the biggest issue that will have a shakeup in the equity markets, one way or the other. So for all my buddies who say, "Nah, tax reform, whatever, man, this market keeps going higher," Terry Duffy, the CEO of CME Group, hit Wiz's 2 biggest points: North Korea and tax reform. So maybe he and I are the only 2 idiots out there, and everybody else is just going to bid this market higher. I'm telling you right here, guys, this is the 2 days ago when we got all this dump, that the headline on the Drudge Report was DC chaos. We don't like Washington and chaos, folks, especially when they're trying to get tax reform passed. So DC chaos is kind of bring us a little bit back here. So we talked about that earlier. VXX short squeezed. Talked about a lot of this stuff. I'm gonna press forward to our training. But right now, guys, I'm market neutral. I changed my strategic mindset the other day from cautiously bullish. Now I'm market neutral to maybe slightly bearish. Our SPX iron condor, it's up a little bit. Mine is up 13%. I think the futures are up, looking pretty good right now with the tech beats. What are the futures at? Oh, they're flat. Well, all right. Well, I would think the market's going to be up a little bit, and we just need the a little bit, maybe $1 more. What are my break evens on our iron condor here? Hold on. 25.63. That's the break even, guys. Now, yeah, obviously we need it to finish above 25.65 for the max profit, but 25.63 is at least the break even to the downside here. Okay. So the tactic, so folks, we'll talk about iron condors next week, but the tactic we're going to cover tonight is actually a double vertical. Okay. So some people, when they first hear about this, they confuse it with an iron condor. An iron condor, folks, is a range-bound trade. There it is right there. It's a little tight. It was obviously a tight iron condor since it's a weekly. Iron condors, range-bound trade. The tactic I'm about to teach you right now is, and I'm not kidding when I say this, for the folks that have been around, you know, I need three of this same word in a row in order to do this tactic. You ready? You have to be really, 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 3 times, really, really, really bullish or really, really, really bearish. Okay, I actually call this tactic an afterburner trade because when it's working for you, holy crap, man, get out of the way. Katie bar the door, a lot of profits. When it's working against you, it'll hurt. Okay, that's why I usually only do this this tactic around, maybe with a VXX. We've done these around the Brexit. We've done these around the elections. We did this around. We printed money with this trade going into known events where there's unknowns. Okay, like I said, the Brexit, the election. I knew what was going to happen with the election, but so this trade is called and we'll start bullish first, okay? Because I want to use VXX here as my example. So if I'm bullish, this is VXX, folks. This is the VIX short-term futures ETN. You can't do spreads on VIX, longer discussion. But anyway, folks, let's say I really, really, really think that, Terry Duffy's right. And he said, how do you phrase it? He's like, people are scared to trade. Where do you say it here? Let me read it. Yeah, here it is. It's a function of vol, but that's not the only component. You're looking at low interest rates. You're looking at commodity prices being depressed. You're looking at a whole host of issues. And right now, people just aren't trading the markets. They're afraid to buy. They're afraid to sell at the equity markets because of levels we're trading at right now. I think it's a wait and see game. What did I tell you, folks? I said this thing's get right about here. I said this is getting hypoxic. You see the breadth of this? I said it was low volume and low volatility. And then these big swings, folks, the 300 point up, the 300 point down, the 300, it's or triple digit. This is a very, very indecisive spot for the market. So this is why I'm happy to be talking about the double vertical tonight, is because this is a tactic that you might want to use as a hedge. Now, we talked the other day. I don't know where Richard went. I didn't see him again. Maybe he pitched out. Remember, folks, a hedge, if we're looking at this trade, usually I do these bullish or bearish double verticals as hedges, but I also use them as trades, and then we squeeze those words together and we got tredges. A hedge, let me be clear again, folks. When I hedge my portfolio, with a standalone trade, I'm not talking about our spreads, guys, whether it was synthetic stock the other day, a long call diagonal, the spreads that we do, those are in and of themselves hedged because they're spreads, right? We're long something and short something, so we're covered. So separate discussion. I'm talking about having additional insurance on. During the PLTB the other day, or even accelerated retirement yesterday, I said, hey, if I were in these hedges and they were making money, I'd get out of them. I'd take the profits and reestablish more hedges. Okay. So a hedge, to be brutally clear, folks, I don't care. Actually, I don't want it to make money. Does that make sense? It's like having, auto, home, and life insurance. I don't want to use that. If I'm using that, that means something bad has happened. Okay. So with a hedge, folks, let's be clear. That's why sometimes on these trades, Wiz, what are you doing with VX? I'm like, I'm not doing anything. If you guys remember, for those of you, if Fish was here, a lot of other folks were here. Right here, folks, This was a Wednesday or Tuesday morning in the PLTB, and somebody's like, "Hey, we got a VXX trade expiring Friday." I'm like, "I'm not doing anything, man. What a difference an hour a day makes." I said, "No, I'm not touching it." I said, "With my luck, here's my exact quote. My exact quote was, with my luck, by Friday, something's going to happen to freak the market out." And I rolled it or I closed it, and that was stupid. What was this, Thursday afternoon? Thursday afternoon at like 1:02. Breaking news: Jim Comey and the New York Times and the president and impeachment, and the market imploded. We took a $4,000 down hedge, and it became profitable $3,000 or four, whatever. It was an $8,000 swing, folks, in minutes. So hedge, I don't care if it. Matter of fact, I don't want it to make money. If my hedges are making money, that means all of my longs, my Jan 19s, my Jan 20s, my Jan 18s, are getting kicked in the gut short term. I know they're going to recover because markets recover unless, God forbid, we get a North Korea or something like that. So that's a hedge. A trade. This is why I'm spending some time on this, folks. A trade, I want to or expect to make money. For those of you that were here for the Brexit, I got the Brexit wrong. Remember? I'm like, I was a 50 delta. I'm like, I don't know. I got to believe the polls. 52% are saying, they're going to stay and others are leave. I should have known when Barack Hussein Obama went over to London and poked them in the chest like a week or two before the vote and said, "Hey, you guys better not leave." Okay. I think he even looked at his watch. He did something like, I ain't got the time. I'm kind of a short termer. I don't have time to work my own separate trade agreement with the UK, so you better stay. Last time I checked with the Brits, I flew with a lot of Brits, great folks. They don't like being poked in the chest, especially by their retarded little cousin. So I should have known at that moment that they were going to vote to split. But anyway, so I got it wrong. The Brexit I got wrong, but we made $22,000 on it. We made 11 grand on the way in and 11 grand on the way out. So same thing with the election. You guys who traded with me through the election, one of the only financial professionals to make that a career call, man. I said Goldman Sachs, Citi, Morgan Stanley, they're all wrong. Okay. And they're all Hillary supporters. Not only is she not going to win, the market will rally 15 to 20%, not implode 15 to 20%. We got it right. But we traded bullish double verticals on the way in. And then soon as and we'll talk about in a couple minutes how you want to be early with getting out of verticals, double verticals. Okay. Like my dad, God rest his heart, Wednesday was actually the 12th anniversary of his passing. He used to, hey, Matthew, can you take me to the airport tomorrow at like, 8? I'm like, Dad, your flight's not until 1. What, did you get an earlier flight? No, I got my book. I'll sit there. I'll be fine. His point was, if I'm 1 minute late, they're not going to pull that airliner back for me. So, and unfortunately, he's right. But when you do double vertical trades, folks, you want to be early, because in the blink of an eye, like with the Brexit vote, I got out of that double vertical just as I'm like, time to split. And then one potato, two potato, vol implodes. So write this down. You need 3 reallys, really, really, really bullish, or really, really, really bearish, and be early. Be early with this tactic, or you will turn a massive profitable trade into a loser in a blink of an eye. Okay, so that's kind of the setup for this trade. So my strategic mindset is market neutral to slightly bearish. As Terry Duffy said, man, nobody's trading up here. This is hypoxic. When you see the volume and breadth getting this thin and then big swings like this, usually the next swing is to the down, man. Okay, so this is going to be, this is why I call this a trade. This trade I'm going to cover right now, it's a trade. I think something is going to happen in the next 30 days to freak the market the hell out. I told you, I said close your October hedges and then maybe roll them out to November. So here's what that's the strategic mindset. This is kind of a trade right now. So if it doesn't make money, but I think it might, because when you look at the VIX here, folks, something has happened every month for the past God knows how long to do what? Freak out, really big freak out. Nothing. Actually, Wiz, we're starting to freak out a little bit. Yeah, a little bit of a boiled frog here with the VIX, folks, right? Now we're starting to see a little bit of a heart. This is a gentle climb here, guys. The VIX usually does what? It's up 10 to 15% in minutes because of some breaking news or something like that. This is what? A lot of people doing what we did. We had our October hedges on and now move them out to November. This is people remaining creeped out. It really does my heart good to see a guy I used to interview often on the Options News Network come in here and say what we've been saying here. So we kind of do know what we're talking about. So this tactic, let me start by asking a couple questions here. Wiz, you had me at I need to hedge or hedge or trade. Okay, so if you think something is going to go up, Wiz, I think you're right. In the next month, something has got to give. We didn't have a North Korea in October. Month ain't over yet. Do you guys know that there is 3 carrier battle groups? 3. 1/3 of our carrier strike groups are in the Pacific. Anybody see that in the media? No, of course not. We're still, talking about Trump with collusion, right? There are 3 battle groups. I got the most recent Tailhook magazine, and it's funny because either the commanding officer of those boats or the CAGs, the guys that own the airplanes on those boats, I'm very good friends with all of them. One guy was a Blue Angel. His call sign is V8. So I was looking at the commanders of these boats and the CAGs. I'm like, oh my God, I know that guy. He's an idiot. But now they all look, in their whites, and I'm the skipper of the Abraham Lincoln. I'm like, oh my God, I remember being on the Abraham Lincoln and thinking the skipper was the oldest, crustiest guy in the world, like King Neptune. But anyway, folks, this is again, the market only cares when it cares. So that's one of our wisdoms is just because we're not covering, or we are covering, but just because the media isn't covering that, there's three CSGs, carrier strike groups in the Pacific. I might have, I said an October surprise. I'm off by a couple weeks. I don't know. But anyway, guys, let's get going. If you think, you ready for this? Wiz, you're right. I think volatility is going to spike in the next 30 days for God knows whatever reason. Paul Ryan and the Republican clown car can't get tax reform passed. Something goes bump in the night. 3 carrier battle groups. Something bad happens. So you're right. What could we do? We could buy a bull call spread. Well, I got VIX up here, but we'll use VXX. Wiz, you're right. So, but if you think volatility is going to go up, if you think VXX is going to go up, let me ask the master of the obvious question. And sometimes it's not so obvious. And I like asking this so it really shakes the cobwebs out. If you think this is going to go up in the next 30 days, what do you also think it's not going to do? Let me get the logical answers here. Let's see if we can do this. If you think VXX is going to go up, you got it, Fish. Yeah, exactly, guys. You don't think it's going to go down. So for all of you sitting here going, well, Wiz, you're right. I think VXX, it's starting to come to life here. And people are waking up. I would buy a bull call spread. Not me. You know me. That makes my skin crawl. Just the word debit spread. So this would be a debit spread, a bull call spread. No, thank you. I'm cheap, guys. So what could we do? Like I told you, a little foreshadowing whenever we covered a bullish spread or a bear spread, I said, why don't we have somebody pay for this spread? By selling what? A bull put spread. Doesn't it make sense, guys? Oh, that's right. Well, Wiz, if you don't think something's going down, we could sell a bull put spread. That's a credit spread, folks. So you know what we could do? Take in a little bit of scratch from selling this bull put spread and do what? Exactly, Brian, and pay for the bull call spread. So, and I'll show you on the chart here in a couple of seconds when we make this trade together. It's a double vertical is nothing more than this. It's 2 vertical spreads on top of each other with the same strategic mindset. In this case, bullish, that volatility is going to spike in the next 30 days. So let's go. Here we go. Tactical employment. Let's go into the options. Let's just fly out, I don't know, man, a month. Okay. No 24th. not throwing a dart. I'm going out a month. I think something might happen in the next month to spike volatility. It should. So let's take a look. Where are we at? 36. Really does look, and remember, folks, back where the VXX has to rebalance daily. This thing goes to zero, folks. Take a look at the 2-year chart. It had to rebalance. Look at that. That ain't a chart of the VIX, folks. This uses short-term futures. Again, this is a 8-hour lecture where your eyes are going to glaze over. Just know that over time, this position gets eaten away at with theta. Okay, so maybe 30. I don't know. 36 is a little. 35. So here's what we can do first. Let's do the 35 and a halves. Let's see if E-Trade, after they destroyed everything, has a, there it is right here, vertical spread. I don't know why it's blacked out here. So let's build this together. So let's do the bull put spread, selling and buying. Okay, so let's do the 35 and a halves. I'm doing this close to the money, 35 and a half, 35. Again, folks, so we're building a bullish double vertical. You ready? I'm going to sell, whatever, we'll keep one in here for now. The Nove 24. How'd you pick November 24th with? I literally looked at the calendar and it said, like Terry Duffy is saying, people are scared to trade right now. When you hear the word scared to trade, it's usually not going to be another leg to the upside, especially when you've seen this for a month and a half. So I don't want to keep fumbling back through my strategic mindset, but it feels better. So this is also called what? We covered this last week. This is called a credit spread. We're bringing in a credit of 32, 33 cents. We're getting paid to do this trade. You guys know I love spreads like this, credit spreads, where you get paid to be the house, right? So now, Wiz, you said if you believe something is going to go it's going to go up, it's not going to go down, so you took care of the bull put spread. Now let's do this. Let's add a bull call spread. Where? I don't know. Let's go with the 30. What are we at? 36 and a half, 37s. Here's and we're getting to the really, really cool part here, guys. Let me make 36 and a half, 37s. So before I even get in to the strikes and everything like this is what should put a massive, massive smile on your face. This trade, net, is a credit. We're getting paid to do this. So let's take a look at the picture first of all. So the picture's worth 1,000 words. Look at this, folks. Bull put spread, bull call spread. Like I said, folks, it is simply two trades on top of each other with the same strategic mindset. In this case, bullish on VXX. Let's throw in maybe 150. Let me just take a look at the metrics real quick. So we can get an idea of what's going on here. This is just like, guys, the election and the Brexit trades. It was very close to risking $5,000 to potentially make 11. So let's get pretty damn close to that. These were awesome. Maybe 160s. There you go. Look at that. Risking 5 to potentially make 11. These literally, this is copy paste, the same type of trades we did around the election, the Brexit, debt ceiling fights, government shutdowns, any taper events. Remember, we used to trade Ben Bernanke. Hey, we might taper this meeting, and we do bullish verticals. Before he even came out to the press conference, we'd close them and then get bearish. So here's the picture, folks. There's the blue line, which is VXX. This is why you need to be really, 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 really something. Okay, really, really bullish in this case, or really, really bearish. Okay, this is why I call it an afterburner trade, because when this thing starts, if we see a big spike in volatility, we wake up tomorrow and something did go bump in the night, and the VIX is through the roof, and this trade will make money very quickly because it's on steroids, guys. We have two spreads on top of each other. Now, if you're a probability trader, you're probably sitting here going, hey, well, Wiz, these, using at the money vol, there's only a 43 and a 45. These are, they ain't super high. Yeah, I get that, folks, because obviously E-Trade is going to show us the best And worst case scenario, either the thing implodes or it has a rip your face off explosion. But look what's more realistic, guys. There's a better than a coin flip. There's a 53% probability of this trade at least breaking even. So let me slow down here to let this sink in for effect, because this is a big deal. Let's go back to this screen. So Wiz, hold on. Don't scrape me off into the wall here. You're telling me that somebody just came into my kitchen and sat down and said, I'm going to pay for your USAA auto, home, and life for the next 30 days. I'm going to pay your insurance. Yeah. Isn't that pretty cool, folks? This is you're getting paid to hedge. The market is paying you to be hedged against a spike in volatility out a month from now. This should put a massive smile on your face right here, that this is a net credit. You're bringing in money to do this trade. That's what's cool. Now, you can play with the strikes, and even Brian, sure, it could be, you can do this trade any time frame. I don't, Brian. I do this for short-term, tactical, quick strikes or hedges. I mean, I know folks who do this around earnings. You know me, I'm not an earnings trader. It's throwing darts. It's ridiculous. Well, got the earnings right. They blew the doors off of it, and now the CEO is sitting there giving his forward guidance, and the stock's imploding. Don't do it. You could if you want to. Wiz, I think today, Amazon blew it. If you had a strategic mindset that Amazon was going to blow earnings and the stock was going to gap up after hours, you could have done this trade. But it is, I did it on CMG this week. There you go, folks. So we'll talk about the bearish case in a minute here, but Tamara's right. And I talked to Chris, one of our Full Throttle members, on Sunday over the phone. We had a great discussion. And I said, hey, man, we don't, as options traders, we don't care which way the market's going, up, down, or sideways. To Tamara's point, CMG's getting the shit beat out of it. Ride it into the dirt, man. We can pound these things to the downside with bearish double verticals. Okay? So when, not if, this market rolls over, we're going to pound the hell out of this market to the downside with SPX double verticals, bearish double verticals, bullish double verticals on VXX. So we're ready to do that. That's what's cool about being an options trader, is we can be very tactical and change on a dime. So that's great to hear, Tamara. I love it. That's a great example. See something, and that's a technical trade too, Tamara. It's not like Chipotle's going out of business tomorrow. I know they gave weaker guidance. They said they're not opening as many stores and stuff like that, but they're not going out of business tomorrow. But as a short-term tactical bearish trade, very, very well done. Okay, so once again, and you can play with this, folks. You can play with the strikes. Let's go down to the 35, 34 and a half. What's that do? Okay, well, I get a little bit less of a credit, but look at this. I make maybe a little bit more and risk a little bit less. And my probability goes up to 56%. So you can sit here. This will be your homework. I'm not going to sit here and play with each little strike for 50 cents, but you can play with this and get a bigger credit, a less credit. It just depends on what your strategic mindset is. Does that make sense? Okay, so again, 160 contracts is based on a $100,000 model portfolio and not wanting to risk more than $5,000. So we're potentially making 11 by risking 5. That's a hell of a risk to reward ratio. And I got to be honest with you, folks, this seems like a pretty damn good idea. So for those of you who in PLTB or AR the other day, I said, hey man, if your hedges are showing some pretty good money right now, get out of them and reestablish them out to November. There you go. So Tamara's got a great point, folks. When something's on a tear, what do I say? Either get out of the way and enjoy the ride, or join it. And one of the things you can do when something's on a tear is this trade right here, a bullish double vertical. Okay. Now let's talk about trade management here. Obviously, the mission objective of this trade, that blue line right there, VXX, is to go to the right. We want to see a spike in volatility, and this trade starts making money right away. So let's talk through a couple things. We wake up Tuesday and whatever happened, but the VIX is having a rip your face off rally and this trade's making money. What could we do? So let's talk about trade management with this. First of all, I have 160 contracts. It depends on how I'm viewing this. If this is a hedge, maybe I just let it ride. Okay, whiz vol spiking and something bad happened, I'm going to hold on to it. Great. If it's more of a trade, maybe since I have 160 contracts, what do? I take half of them off. With 160 contracts, folks, and I'm seeing massive profits, volatility had a big spike, why don't I take 80 contracts off? Close half. Take some profit off the table and then let the rest of them ride. Does that make sense? Yeah, it does. Here's the other way we can manage this trade. I can't stand not being able to open the spreads here. I have on a bull put spread, which is a credit spread, and I also have on a debit spread. Just, you guys know the name itself makes my skin crawl, a debit spread. Let's say we wake up Tuesday morning in the PLTB, massive spike in volatility. What spread, if we're looking at profits in both of the spreads, would you close first? Which one would you close first? Credit spread or the debit spread? You got it, Fish. You want to close the debit spread first. Why? I answered this, folks. It's theta. Okay, theta, time decay. Remember, that's one of the reasons I hate debit spreads. With a credit spread, unched on the day, you get time decay. So if we sell a bull put spread and it just sits there, we made money that day. Not with a bull call spread, man. If it sits there that day, you lose money on theta. So ladies and gentlemen, if you wake up one day and all of a sudden VXX is having a nice rally, maybe you take some profits off the table by closing the bull call spread and doing what? Holding on to the bull put spread and taking that one to max profit. Okay? So a couple ways to adjust this trade. Close half the contracts or 3/4 or a quarter. It's up to you. Me, I'd close half of these and go, you know what? I got 160 of them on, good profits. I'm going to let the rest of them ride. Great idea. Or we see a big spike. All right, Wiz, the debit spread's looking at some nice profit. I'm going to close it, and then I'm going to put the credit spreads on there. Make sense? Very, very good stuff. Okay. Adjustments to the downside, guys. It's not necessarily a percentage. I usually look at about half the capital. If this isn't going against me, and we're, for the next week or whatever, as this thing's on, you could adjust it by saying, hey man, Wiz, the market's just melting up. You just can't keep this market down. It's crazy. I usually look at about a dollar amount on this thing, folks. If I'm quote losing, and again, I have to use air quotes, or I just can't stand using the word losing money on a trade like this if it's a hedge, but you get my point. If I'm down, let me say that if this position is down about $2,500, that's usually when I'll start scratching my chin and go, hey man, is vol just gone? Are we in a new world order here where just volatility doesn't exist anymore? Yeah, I'm down about $2,500 in this trade. Yeah, but also, and it just rolled off my tongue nice and easily. What I said, trade. If this is a hedge, guys, sometimes I set this and forget it. I just told you. We had a great Obama teachable moment right here when I'm like, guys, this is where I think I came up with the Tredge term. I'm like, folks, I don't touch these. This is a bullish double vertical because I think something's going to happen to freak the market out. Whatever, Wiz. Thursday market freaked the hell out and the trade made $4,000. So you have to, as the pilot in command of your portfolio, you have to decide how you're going to treat these. As a bilge pump, it's a break glass in case of emergency, or Wiz, I think the market is going to freak the hell out based on something. Then that's a trade. Again, folks, you have to come up with what you're doing. I go out of my way when I put these things on to say whether it's a trade, a hedge, or a Tredge. Okay. So here's the bullish double vertical. One more time. It's a bull put spread and a bull call spread. Now let's talk about this. Let's pull up the VIX and bring up a chart. Here's going to be some Yogi Berra-isms, right? You ready for this? When something is known, it's known. I forget what this one was, but look at this. Massive spike in volatility, and then 2 or 3 days later, it implodes. Massive, look at this. This was like an hour spike, and then it implodes a day and a half later. This is what I'm telling you, folks. When you do a double vertical and you get one of these moves, get out right around here. Well, how do you know it's right around there if you don't know how high it's going to go? Pigs get slaughtered. You just know it, folks. Whether it was the Brexit or the election, as this thing started making 7, 8, 9 grand, I'm like, whoa, time to get out of this thing. And do what? Roll inverted and do a bearish double vertical. Technically, folks, you could almost just invert this trade, right? So watch this. Let's just invert the trade. And voila, this thing should be pointing, oh, look at that, Wiz. This is now a bearish double vertical. The P&L just switched what? To the left, to the port side for you Navy types. So there's the blue line, VXX, and we think Vol's going to smash. We did this perfectly. I could, after the election of Trump, I'm like, the VIX can stay elevated for maybe a week. I don't think it will, but I went conservative, and I went out a week on my bearish double vertical after the election. I was wrong. VIX came in like 2 or 3 days. It's like, dude, he won. He's a Wall Street guy. Let's rally. Holy shit, I thought it would take maybe a week for the liberal media to stop frothing at the mouth. So be early on your exits and putting on a new one. Okay, so this is, and again, I make fun of men and women who use this term in trading, but I'm going to use it. These trades are potentially like shooting fish in a barrel. This is, here's proof. It's on your screen. You can go watch the election and the Brexit webinars. Look at this. It's the same risk to reward. Risk in 51 to potentially make 11. This is how I know for a fact we made 22 grand on these trades. One was 11, hit max profit on the way up, and the other one was max profit when vol imploded. These are layup trades, folks. But again, these are only layups when usually there's a known event. For example, this Comey thing, I didn't know that was going to happen. I'm not even going to pretend to sit here and say, yeah, I'm a smart dude. I knew that was going to happen. What are you, high? No, I didn't know that was going to happen, folks. So that's why I didn't do a bearish double vertical. I mean, I could have after the thing spiked, but with the, oh my God, he's going to be impeached and everything like that. 24 hours later, I'm like, you know what? The dude's a felon. He either lied a month ago under oath in front of Congress, or he committed a felony by not arresting the president right there in front of him. So, well, exactly, Brian. My point being is I didn't do a bearish double vertical here because I was like, oh boy, is this the other shoe to drop? Now we know it's the disgusting scumbags at the FBI and Clinton and Podesta and Debbie Schultz Wasserman and all. It's just it's disgusting. So I didn't do a bearish double vertical here, but folks, when you have known events, a Brexit, an election, a government shutdown, this might be, I got to be honest with you, maybe in a week or two, maybe we'll talk about this out in Lake Tahoe, I'd be getting one of these on through December in a couple weeks. Why? What's going to happen in December potentially, folks? That could be a food fight. Aside from, I'll answer it for you, half the question, aside from tax reform not getting passed, what could be an absolute shit show in December? You got it, Brian, the budget. Remember, Trump out-Trumped the Republicans and did a deal with Nancy and Chuck. And Mitch McConnell and what's his name sat there with a stunned look on their face like, did he just work with the Democrats to go around us? Yeah, he did. So we have a debt ceiling fight in December, and we have a potential tax reform. So the debt ceiling actually has a day. I don't have my notes in front of me, but there's a day to that. So if we have a known event coming up, that's when I'd use these. Or if you're like me right now going, the next 30 days, folks, and Trump's going to South Korea, Japan next week, right? And China. I'm sure there's going to be a great picture of him at the DMZ with the binoculars and Deb, because right now it's too far out. Deb, as you know, you've been here long enough that you know the market, the Comey memo. This was a Tuesday morning and the market spiked. Deb, I'd like to keep these about 30 days out. That's why I said I'd do it in a couple weeks. So let's throw one of these on. I just kind of roll them. For a while there, folks, for those of you who've been here for a while, we used to have VXX trades on like every other month until this really started happening. I'm like, smoke the hopium, folks. Vol is dead. My hands would be shaking like I can't believe I'm even saying this. This is coming from a guy that was in the SIBO at, VIX 80, VIX 90 in 2008, Black Tuesday or whatever it was. So it's a great point, Deb, but I keep my leash close on these things. I got to be honest with you, Deb. Even I think you were here, Deb, around the election or the Brexit. We were trading VXX like 4 days was a long trade for me. I mean, the expiration would go out. We did the Trump election. I did VXX like out to that Friday, election week. And then I went bearish double vertical out to the following Friday. So we were almost doing weekly trades on VXX. Does that make sense? Very long answer to your short question. Kevin, not really a rule of thumb, but here's, if you think, let's take a look at VXX. Look at this, folks. It's starting to come to life. So my rule of thumb, I guess I do have a rule of thumb. I'd go at the money. That's why I did like 35.5 right here, or 36. So the closer to at the money you come with your bull put spread, Kevin, you get what? A hell of a lot more premium. So let's do that again. Let's go up to let's do the 36, 35.5, guys. 19-20 cents, folks. Look at that. Less probability, but also, whoops, that's bearish. Yeah, sorry. You know what I'm getting at. Same other side of the trade. So look, yeah, risking a little less to potentially make a little bit more, and you're at 50-50, 50% probability is going to work out. Okay, so yeah, that's exactly right, Fish. We were using the VXX as quick strikes. We knew election Tuesday. We knew that I knew when Trump won that I'm like, it'll take about a week for everybody to realize the dude's not putting people in internment camps. I was wrong. It took 3 days. But the thing still made Matt. I love being wrong, whether it's the Brexit or how quick vol was going to. You've heard this term, folks, the vol smash, the volatility smash. This is the Yogi Berra-ism I wanted to get to, is this one. You ready for it? When something is known, it's known. Now I know that sounds stupid, but the VIX goes up on uncertainty. Whenever you see the word volatility, folks, as an options trader, you have got to do what? Just replace it with the word uncertainty, because volatility, it sounds, you sound smart at cocktail parties, but what's volatility wisdom? Like, it's uncertainty. So when something is uncertain, the volatility index goes up. I did my old rope-a-dope, what was it, a couple months ago, 2013. I was actually in San Francisco giving a speech to Bank of America Merrill Lynch advisors. The VIX doubled from 12 to 24. And I always rope you guys into this. And I say, hey, was the market going up or down in that May? And 90% of you, other than the ones who know the answer, say no. Well, the market had to have been going down. The VIX doubled from 12 to 24, and you'd be wrong. This was the first Fed meeting when Bernanke was rumored to maybe thinking about tapering. So this market was going up, folks. We had $85 billion a month being pumped into the market from Bernanke. You couldn't, I don't care how many times you work out a day, there was no way in hell you were going to keep that liquidity from the market going up. But uncertainty. So remember, folks, write this down, or you should have it written down. Market up, VIX up, something is up. What was up? The Fed meeting, man. So the market was drifting higher. We were smoking the opium, but we were freaked out that Ben might taper. Okay? Market up, VIX up, something is up. So again, 80% of the time, folks, the volatility is going to go up as the market implodes. Duh. But the 20% of the time it doesn't, there's where your true options traders make a killing. Guys like me and many of our members around Brexit, the election. That's why I hate this whole, I like gridlock, folks. I used to love the government shutdowns and all that stupidity. I prayed for it. I pray for known events where there's going to be stupidity and the markets are leery of how the government or whoever's going to react. I love those days. Sadly, there's not, again, you should have been here yesterday, 8 feet of powder. So the next known event to me is the debt ceiling, but also potential failure of tax reform. So again, Deb had a good question. Why don't we go all the way out to December? Here's the other reason, Deb, we're not going all the way out to December right now. What did I say about VXX? Look at the chart. Let me just do a year to date. Look at that, Deb. Look, you can be right. Yay, pop, get out of it. Because it's still pop, get out of it. pop, get out of it. So you don't want to do this more than a month, Deb, to me. Kevin, so you use close to all the money for the credit spreads on the. So you use close to at the money for the credit spreads. Yeah, close to at the money. Yes, Kevin. That's sorry. My glasses aren't working. So yes, I usually put the bull put spread pretty close to at the money to get the most bang for my buck. But Kevin, the reason I also do that is what? I think it's going to spike. If you don't think it's going to spike and you're just throwing darts, maybe you go a little bit lower, not at the money, a little bit out of the money. Does that make sense? So it depends on your strategic mindset. For me, this is a good vol starting to wake up here. So maybe we put it right, 36 or the 35 and a half. Good? Make sense? Oh yeah, Tamara, yeah, I could do that with the ticket. You got it, Kevin. That's exactly right. Oh yeah, you can look at that, man. Instead of sitting there clicking all of them. So they make all these Gucci little stupid things where an old guy like me just clicks on and reverses the trade, but instead of like doing stuff that we need, you know. So, but yeah, Kevin, that's if you again, folks, you don't use this trade unless you're really, really, really something. That's three of them, three reallys. If you're anything less than three reallys, don't do this. Okay, so play with it. It's yeah, no paper trading here at E-Trade. It sucks. Trade Station does. Um, Fish, we're heading there, man. I think Trade Station's going to be a good fit. I'll probably go over to their headquarters down here, over there in Plantation, to get a nice on-site briefing of their tools and go get checked out in the new airplane. So I'm looking forward to it. Yeah, me too. Well, and I'm fired up for you guys. You get a 20% refund on your training. And again, guys, I don't think they do it on like lifetime members or stuff like that. I think it's up to a dollar amount, or it would be stupid. It wouldn't be a good business for them. So I'm working to get the full throttle annual subscriptions refunded at 20% of it to be refunded to you. That's a 20% profit, guys. That goes right to your bottom line. So Bill, when it spikes, do you have to be on top of the trade to sell at profit, or can you sell it in advance? Bill, that's what it's a good question, but this is why I say this. You want to be early. And here's how I made max profit on some of these things. As it was spiking, I'd put in the order to get out. And then the thing would keep running, and all of a sudden I get out. Okay, so Bill, be early. Okay, because look at this. This is one day in the VIX, folks. What happened the next day? It imploded. It's a volatility smash. So, Bill, it's such a Wall Streetism, but dude, what is it? Hogs get fat and pigs get slaughtered. Don't be a pig with your if you're doing bullish double verticals on volatility and the thing. Breaking news on the bottom third on CNBC. Breaking news: X, Y, and Z happens. Markets tripled at biggest losses since July of 2008. Sit there and go, oh, money, 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 money. This is great. My longs are getting kicked in the gut, but that's why they're also called longs. They'll recover. They're longs. They ain't called shorts. So get out early. Bill, your pigs get fed, hogs get slaughtered. There you go, Lauren. So always, always, always be early if you're trading volatility. Now, guys, I did this on VXX, but I got to be honest with you. Maybe there's an iPhone 97 event coming out, a WWDC or WDC conference, or if there's a known news event around a stock that you're bullish or bearish on, you could do this. I haven't done a single stock. I really haven't done a single stock bullish or bearish double vertical in years. Here's another symbol you need to take a look at. SDS. This is called the Pro Shares Ultra Short. What's that mean, Wiz? It means when the market goes down, this goes up. The market goes up, this goes down. So exactly, Brian. So this trade, ladies and gentlemen, I do, for a while there, we do bullish and bearish double verticals on SDS. Because remember, I just told you, 20% of the time, folks, the market and the VIX ain't moving in the same direction, right? So the VXX trade that I just showed you is a hedge against a spike in volatility. Volatility and uncertainty can happen in up markets. I just told you about 2013. So if you're looking for an overall market hedge, Wiz, I think you and Terry Duffy are right. People are terrified to trade up here. This thing's hypoxic. We're due. I told you folks, the market is looking for an excuse. They're looking for a 3 to 5% reason to pull back. It'll be tax reform. It'll be the debt ceiling. It'll be one of those. And then everybody in the financial media would be pointing at the TV going, see, we knew this was coming. So maybe you look at SDS. Okay. SDS, Sierra Delta Sierra. And that's a double, right? Ultra short. Or you could just look at, was it SH? It's a fighter pilot term. Sierra Hotel means shit hot, right? So SH is just the pro shares regular short. So I'd look at those too. So, and there are times, folks, when we've had both these type of trades on, a hedge against a spike in volatility and a hedge against a market pullback. Look at Tamara. That's awesome. Tamara's, she knows what she's doing, man. She's, hey, Wiz, I got both those on. I think something's going to happen to make volatility spike, and I also think the market might pull back. I would have both on. Yeah, Fish, I haven't traded SDS in a while. Why? The hopium, dude. We've traded VXX, but because I think, even up here, this uncertainty, but this is anti-SDS weather. I will tell you, Fish, right now, and Tamara's probably doing the same thing. Now I'm getting a little creeped out. Now I was creeped out here and right around here, and I've had a couple creep outs around here, guys. This is nuts. This rip your face off rally off this 50-day moving average, and just like Terry Duffy said, man, this is stupid. He mentioned North Korea in here a bunch of times, and look at when he says this. When volatility comes, it comes fast and furious. So, folks, Terry, this ain't his first rodeo, man, and it's not mine. When volatility spikes, it will be in the blink of an eye. So, to Bill's point, when it happens, start thinking about getting out of it. As this thing, I'm giving you a brief, folks. This is why this is called a live training session or live brief. When this thing starts to run, holy crap, Wiz, you're right. Market's down triple digits. The VIX is up 20%. Get out of your trade or start thinking about working to get out of it and get bearish. Be early on these. Okay. I made some money on both this week. Took my money and replaced them. There you go, Tamara. Think of it like Tamara's doing, folks. Think of this as a wheel. It's like the cash secured put discussion. Use your hedges as this. It's not a bad tactic, guys, to have one of these on at all times. Some people, Wiz, being short vol has been the trade this year. Well, it is until it's not. I've used this term several times this week, and I've heard some of you repeat it back to me. Some of my coaching clients are like, Wiz, I don't want to step in front of a bulldozer to pick up dimes. You want to be short vol, folks? Great. Until it's not. And then you get really, really wiped out. So all these little base hits with your bear call spreads on, VXX or VIX can get totally obliterated when, not if, something goes bump in the night in the DMZ with 3 carrier strike groups, tax reform doesn't get passed, the debt ceiling. Again, it is my job to try and scare the shit out of you and say, the risk here, folks, is to the downside. Anybody can bid this market higher. Matter of fact, I think 3 dudes are, right? Moose, Rocco, and Tamara. I don't know. This market is very easy to get bid higher. Markets take what? The escalator up, and we're going to take the window down. I don't know what it's going to be, folks. It's my job to be the red team, to point out potential downfalls and say, folks, North Korea, tax reform, debt ceiling, I don't know what else, another black swan event. If it doesn't happen, great. But you are not wasting money, quote unquote, with a hedge, a dredge, or necessarily a trade. You got it, Fish. That's exactly right. Ladies and gentlemen, I never went into maintenance control on the Abraham Lincoln or the Kitty Hawk before flying on mission over Iraq and said, hey, Chief, do me a favor, pull the ejection seat out. I want the extra 800 pounds of gas. Just didn't happen, man. I always went flying with an ejection seat. And when you get in the cockpit, that's the first thing you pre-flight is your ejection seat. So if you pull the handle and the mouse eats the cheese and rocket fires, you're going to save your life. Okay. So just one resignation in FBI. Brian, again, I sound like a broken record, but we've been right, folks. Every one of these pullbacks year to date, we're missing the Obamacare idiot Republican clown car. There's the Comey. There's some Don Trump Jr., North Korea. There's a fire and fury. There's Trump's a racist with Charlottesville. And then nothing. Every pullback year to date has been political. So for the people like, oh my God, this guy rants in politics, I'm like, what are you trading if you're not? How stupid can you be? That's why with these Fibonacci's and reverse twists and doji, that I'm like, how many of you knew that the Comey memo? Show me on your Fibonacci retracement where the Comey memo was, or that Donald Trump was going to say fire. I'm going to rain fire and fury on North Korea as I sit in my country club in New Jersey. There's no technical analysis or any of that stuff. Our SOT, Strategic Operational Tactical, is the only one in the business that does this, and it works for us. So you're right, Brian. We get one. You get a Mueller who finally wakes up and goes, "Holy crap! I got a lot of mud on my hands here. I better bail and keep my." Before, I think this is why last week, folks, all of a sudden it turned to him looking at Podesta's brother-in-law, and it turned towards the Democrats, is because Mueller sees it coming. He sees it. Holy shit! The only collusion happened between Hillary, Bill Clinton, and Uranium One. $145 million donation, and then we give them 20% control over uranium. Are you kidding me? Could you imagine if Donald Trump did that? They'd be marching on the White House right now with their safe spaces and screaming at the sky. It's disgusting. So Brian's exactly right, man. There's a lot of political uncertainty out here with probes and everything like that. I think it's just I got to grab my popcorn and go sit in front of the TV for the rest of the night, because I think this is kabuki theater now. You can't make this stuff up. I have enough experiences with narcissist sociopaths to know when they're projecting on you and accusing you of doing all this stuff, they're usually hiding what they're doing. And I'll leave it at that. Look at that. 2 minutes. Exactly, Fish. We try, man. Common sense ain't so common. It's funny, Fish, because when I do my keynotes and I work with companies and stuff like that, a lot of the stuff, whether it's debriefing, having a strategy, contingency planning, all this stuff, at the end of the day, some of them scratch their head and go, this really isn't, it ain't rocket surgery. I'm like, I know it's not, but I put it in a nice little easy to use format where people go, oh my God, this is the most brilliant thing ever. I'm like, it's kind of common sense, man. But Fish, you and I both know that ain't too common. So, all right, folks, good session. Like I said, apologize for the Analyze Your Trade. That's why I'm up here in Boca. Any new building, folks, I saw hot wire guys in the elevators throughout the day. I'm like, come on, folks, seriously? We can put a man on the moon in the 60s, and you can't give me stable internet. So I'll get a nice video out tomorrow for an Analyze Your Trade, and we'll take a look at, we'll debrief some of the things going on there. Okay? So you bet, Joseph. All right, guys, have a great rest of your night. I'm going to sit here and watch Tucker Carlson. I love the lower third. Russia hysteria backfires on Democrats. I'm going to make some buttered popcorn and with salt all over it. Yeah, you got it, Fish. I absolutely will. All right, guys. Tamara, nice job tonight. I like what you're doing. Karen, fly safe. All right, folks, I am going to go get some, man. Tim, carry out the plan of the day. You're welcome, John. All right, guys, have a great rest of your night. I'll get this published as soon as I can as I watch Tucker smack down one of these Democrats. All right, folks, I'll talk to you tomorrow. You're welcome, Tamara. We'll see you.